Hello and welcome to today's free trading video and market analysis. I'm your host, Kenny, Senior Research Analyst with the MiniAnalyst.com. The first thing we're looking at here is a chart of the market. This is the mini S&P 500 futures contract, front month in nature, looking at the last print of 1063.50 on this Friday, the 6th day of November. 2009. This is early session, and we're looking at about 11:30 Eastern Daylight Savings Time. And the market's tried to hold this trend right here. Been a wild, just simply wild day. This, of course, was the Fed announcement. No change was the Fed announcement. You get the boom, 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 the three-step move. We never really gauge the market until the post-open session of the following day. So that would be the post-open session, which would be right here. And obviously, this suggests bullish. Breaking to a new high right there, broke above both these highs. This is a double top right here formation coming back down to retest the trend amidst a supremely bullish indication right here in our primary indicator, supremely bearish, albeit, indicator right there, and of course bullish, bullish right there. So definitely the bulls were outweighing the bears on yesterday, Thursday, the 5th day of November, and we did get a close near the upper echelons of the day, actually quite near the high of the day on Thursday, but just a bear trap this morning. Had the jobs number come out, highest unemployment in 26 years or whatever. So the markets really have the one side of the case is bearish, the other side of the case is bullish. So that's why you get these crazy moves, and of course that with the subsequent move up to the this is comparable to the 10,000 level in the Dow futures. Actually, we can just pull that up right here. As you can see right there, boom, 10,000 level right there in the Dow was the move, the mini Dow futures actually. So kind of a move right there, but a bear trap. Completely surged to be magnetized to the 10,000 level, 1070 in the S&P futures here, and just kind of holding the line right there. But this certainly was a dive. This was a hitting a diving board, jumping up, and we expected this move. In fact, this was certainly to be a fake out move from a discretionary perspective. Why? Well, look at this extreme negative divergence here in this indicator. We had a fair amount of bullishness there, but as you can see, it's not bright green. Just a little bit of bullishness right there. Bullishness, bullish, bullish. But given the wild gyrations, we definitely expected this move to come on over, which it did following this move right here. Now we're kind of trying to reclaim. So it's just essentially a choppy day. And in fact, that really carries over into the daily chart. Sorry about that. Went to a blank screen. Into a daily chart of the market. This is the S&P 500 cash market, 1067 right there. 1080 is the very key number right here we're looking at. Isn't this going to be a beautiful head and shoulders formation? A little bit of retest 1080 if we get if we can't even muster a high to reclaim to break above today's high of 1071.48. It'll be certainly bearish for the market. We mentioned below 1040 we'd be neutral. We did get below 1040 on Monday. Actually, this was last Friday. Did get below 1040 on that day. I believe we mentioned that we were bearish on that day. I'd have to check. But as you can see, one close does not a trend make, and we didn't get the follow-through close. We haven't even had two consecutive lower closes for that. So obviously our official market timing bias has remained bullish, officially bullish from 961, and will be so until we convincingly break 1040. Or certainly get two consecutive lower closes. Had this been a slightly lower close right here, we would have certainly gone to officially neutral around 1030 or so. But right now we're still holding on to our bullish bias. But having said that, from a pattern perspective, this certainly will be an outstanding head and shoulders formation around 1080. 1070 to 1080 is the sell zone. And it will certainly be indicative of a nice move down to the 1,000 level at least, probably down to around 950 to 1,000. But right now we're still officially bullish. It's kind of getting ahead of ourselves, expecting a formation to unfold, but you never know. Hopefully we can blast on through here. We do remain officially bullish. Right down here, this is not looking good. We'll scroll out just a little bit. Officially neutral right here in terms of momentum. Short-term bearish still remains the case, albeit that could be gray status in nature. Short-term bearish, really moving over to bullish, just a full neutral state here in terms of directional movement, in terms of momentum. Price technicals, obviously we're just trailing along here. in horizontal formation, just chopping around. And so that's where it stands in terms of the market. So where have our portfolios been? Let's go ahead and take a look. Actually, we had a pretty nasty day in the black. It's kind of unusual. We have maybe one or two a year, and of course we have 4 to probably 8 extreme days on the upside. But we also have nasty days. We dropped 17%. I'm not sure if that's here. 17%. Actually, this isn't included on here, but we dropped about 17% in the black portfolio on Monday and sent out a note to our clients that we were now in a retracement zone. Just threw in a couple of numbers in a chart going back to, I believe, the first day of September. So this is the last 2 months of matte black. As you can see, last Friday was at a new, or this actually was probably Friday, so Thursday was at a new equity, short-term high. Intermediate term, probably long term. Actually, this was a long term. This was a long term, a new equity high for the matte black portfolio. The portfolio had never reached this level right here, and we quickly got a nasty sell-off on Monday. Of course, the wild moves that we've seen lately in the market, but this is a buy retracement zone. As you can see, just plotting the equity, we have a beautiful trend line here. You definitely want to take a bit. Here's another nasty day right here. This was probably about a 12% clip, maybe. I'd have to go back and look. But nice retracement into the trend. Boom, upgraded your exposure. And boom, there you go, hitting a new high. Here's another opportunity to do so right here. In fact, as you can look over here and see, as mentioned, this was Tuesday after the day. We made a quick $5 grand, 5%. The day traders didn't really trade on Tuesday. Dropped some money. It's, of course, still a little choppy. Dropped some money on Wednesday. And Thursday, right back to making very nice gains. In fact, the MACD version 4.0 made over 20% just yesterday alone. So as you can see, putting up some nice gains. And of course, the matte black, the most diversified portfolio, gaining again over 5%. So if you look at this chart, you can see this gaining 5%, losing 5%, gaining 5%. So kind of chopping around, giving a great opportunity to put to work additional exposure in the matte black portfolio. And this, of course, is representative of the whole of our systems, probably about 35 future systems. Of course, we do also offer Forex. And as you can see, there's the actual MACD version 4.0 HR gaining 53.50 on the 5th day of November at the close, catching some beautiful gains on that trending day. So very nice day there it was. But we also have Forex, as you know. A lot of people are interested in Forex. This is our MAFX Lite portfolio. This had a banner day on a day. This was Wednesday. So if we go over here and look, actually we can see that that was a losing day for our futures, a losing proposition for futures on that day. But of course, being diversified across all asset classes, including OEX options, but Forex, of course, nets almost $5,000 for the day. This, of course, is a very aggressive $10,000 account. And you can certainly make almost 50% in a single day, as evidenced by our performance on Wednesday. I think since then it probably dropped. Actually, don't know. Could pull it up. Let's see. Today we're down $1,200 in MAFX Lite. Yesterday we dropped $200. Dropped $900 the day before. So it's essentially probably up about $2,000 for the week or so, as you can see. But that's what happens. 80% of your profits are made on 20% of the trading days, 10 to 20% of the trading days. And as you can see, this is another example. If you limit your losses, you can be there for these astronomical days. If you're interested in subscribing to either one of these portfolios, the MAPDT version 4.0 HR or the MFX Lite, you can actually save a little bit of money right now. Just go to the website and you can click on any link right here, MAPDT version 4.0 HR, and go ahead and click add to cart if you're interested in that. And we'll get rid of that. Enter promo code video. And instead of $2,500, you'll save $500. Hope you've enjoyed it. We will see you next week. If you have any questions, go to the website and chat with the support team live. Shoot us an email to admin@MiniAnalyst.com, and we'll see you next week.